a dragon, waiting for a second to push you to your limits, going strong and feeling better. But do you feel them? Can you hear them say?
Welcome to the Retirement Learning Lab, where we teach you how to retire without running out of money. This is the daily NASDAQ market update for August the 17th. Thanks for joining us today. We have a lot of information to cover as we go on a quick round trip around the world to let you know what the world markets did. We're going to do three things today when we talk about some of the stocks that we're talking about. One is we will talk about the valuations, we'll talk about the dividends that are there, and then we'll talk about the ESG, the environmental, social, and governance aspects of these stocks. But let's get started into what happened in the world today in the stock markets. If we take a quick look at the map, we can see that in the United States, we were up quite a bit. Europe was up also. Asia was up in some certain spaces. So let's just take a look at what happened more individually. If we take a look at what happened in the United States, the NASDAQ was up a full 1%. The S&P 500 is in the news quite a bit because we're getting close to where we were prior to the coronavirus market crash. So hopefully we'll get over that very soon and stay over it, but that's where we are right now. When we look at the European indexes, the FTSE 100 in London actually led everything. When we go on over and we look at the Asian markets, the Shanghai Composite led everything. Well, the reason this happened was because the People's Bank of China put in $101 billion with a B into the economy. So they're putting a lot of stimulus in their economy to keep it moving forward, and that'll have a lot to do. I think that might also have something to do with they're trying to combat some of the, let's say, trade wars that's going on in the United States, because essentially the talks in between China and the United States have broken down completely. They were supposed to start having another phase of discussions, but that's not going to happen. The Nikkei was down about 0.83% because they're seeing a contraction in the market in Japan. And when we take a quick trip up north to the Canadian markets in Toronto, the small stocks led everything. Small caps were up 1.71%, and it was bested by the Toronto Venture Index at 1.79%. Now let's take a quick look at the stocks that we're going to talk about today. Today we're going to talk about Amgen and Ansys. If you look at the spaghetti graph that you see on the chart that's in front of you, you'll see that the NASDAQ 100, that's the 100 largest stocks that exist in the NASDAQ. Remember, the NASDAQ is the exchange that's made up of about 3,500 over-the-counter stocks. And the NASDAQ 100 is the largest 100 stocks that is in that particular index. It basically finished the day up about 1%, as I mentioned earlier. And you can see above it we're tracking Ansys and Amgen. Now let's get into talking a little bit more about what these companies do. First off, I want to give you some background and relevance to this. Let's look at these two stocks over the past 6 months. If you follow my dancing cursor here, you see when the market fell in between February and March, and then we've seen a pretty steady increase. Remember, the green line is the index itself. The red line is Amgen, and the blue line is Ansys. Now let's talk a little bit about what these particular companies do. Amgen, you've probably heard of, and you've probably seen a whole bunch of different commercials for Amgen. Probably the most popular one that you've seen has been for Enbrel and Otezla. Now, when we look at that, the progression and the popularity of those stocks, this is actually a Google Trends chart that I threw up here because I thought this was really interesting. See, there's more than 2 drugs that Amgen makes. Of course, it is a pharmaceutical company. There's more than 2 drugs that they make, but the most popular ones right now are Enbrel and Otezla. And if you see, this is just what people have been looking up on Google. If we look at the past year, we see that actually where the green is here, if you follow the dancing cursor, this is right around when we saw research begin into a cure for the coronavirus. And that's something that's significant right now, because what we're seeing is AbbVie, Amgen, and Takata Pharma are enrolling the first patients in what's called the I-SPY COVID trials. The I-SPY COVID trials, it's an alliance of about 20 pharmaceutical companies and life science companies that's working to develop therapies and other types of treatments for the coronavirus. And that is actually going to be one of the big question marks when we look at the valuation of Amgen going forward. If Amgen hits the lottery when it comes to the coronavirus cure or therapies, it could have a significant effect on the company stock in itself. And what's very interesting about this, when we look at the I-SPY COVID trials, we see that they're not, in some cases, they're not really developing new drugs. They're actually using drugs that they've already been making. If you watch TV for a day, you've probably seen a Otezla commercial. There is, in the trials that are going on with the I-SPY COVID trial, they're actually using Otezla as well as some other drugs that are already been created to help treat the coronavirus. If we look at what happened over the past 6 months, again, we follow the dancing cursor over here on the spaghetti graph. This is between February and March. This is when the market saw its decline from that standpoint. And the actual stock itself took off quite a bit and continued up and has continued as development has continued and as the markets have continued. Now, I want to bring up something to you as we go into talking about the next company, which is called Ansys. The thing is, when people talk about the tech industry, you might think, you don't want to be overweighted in the tech industry. That's one of the reasons why you don't want to buy too many stocks in the NASDAQ 100. In my opinion, I don't agree with that. The reason is the NASDAQ is well diversified. Yes, there are a lot of technology companies, but technology goes a lot of different directions. That's like talking about the Industrial Revolution. Well, one company may have been creating steel and another company may have been creating something else. The same thing exists when we're talking about the tech revolution that's been occurring over the past years. When we look at what's happening now going forward with some of these companies, technology is increasing their value, but they do more than one thing. That's the point that I want to get to. They do a lot more than one thing. When we look at Amgen, yes, Amgen is a company that is a drug manufacturer. And they happen to be a drug manufacturer that is making drugs for other things other than the coronavirus, but they're in the hunt for a cure for the coronavirus and for treatments for the coronavirus too. This is what Amgen looked like over the past 6 months. If we look at Amgen over the past 3 months, it's had its challenges. This is a good example of why you shouldn't try to time this market. It's almost impossible to look at it and say, okay, I don't want to buy this stock because I think that it's going to go down, or I do want to buy this stock because I think it's going to go up. Take a longer approach to it. I really seriously think that a lot of people out there, and if you're one of them that's trying to time the market, you're in for some rocky roads. If you think that you want to try to time the markets, I would suggest that you do this first. Go to a company. I think there's one that's called, I've used it before, it's called Webull, and Webull. They have an app. You can do paper trading and you do it for free. It doesn't cost you a penny. You can take and put $1 million on paper into different stocks. Pretend to make money. If you actually can make money and you figure something out, you may have figured out an anomaly. It's not impossible. If you figured something out that works, then use it. but I will tell you that in my 30 years of experience, most people that do day trading don't make money. But there's a few people out there that if you're going to spend all day doing it, you can. The purpose of this show is not really to tell you that you should go out and buy this stock today. The idea behind this show is to build value in your portfolios over the long term. And I think that Amgen is one of the great companies to utilize for that purpose. And one of the biggest reasons is because it has a stable moat. And when I say a stable moat, what do I mean? I've thrown up a picture here of a moat that's around the castle. When we talk about moats around businesses, that means that they compete very well in research and development. So the idea is that they're able to compete very well with many of the other companies that exist. And when we get to talk about Ansys, we'll talk about their creation of a business moat and the uniqueness of their business as well. When we look at the valuation, this is information from Morningstar. And Morningstar puts out some valuation analysis, and they'll peg the fair market value. And for Amgen, they have pegged the fair market value at $219 per share. Right now, today, they closed at $243.01. So we're actually seeing this as overvalued from the standpoint of the stock's actual value in itself. One of the best parts about Amgen, in my opinion, is the fact that it pays a dividend. Now, let's talk about this just for a quick moment. Let me get back over here to this other part for a moment. I am a big advocate in the idea of direct indexing. Direct indexing is where we would go to an index like the NASDAQ 100, and we would pick the stocks that fit the client's criteria. Now, if you are looking for dividends to take for income, you may want to take dividends from companies that are in the NASDAQ 100 and only take dividend paying stocks. That's really easy to do because we go through, we throw up the 100 stocks of the NASDAQ 100, and we eliminate those that are not paying dividends and they leave the ones that are paying dividends, and then create a stream for you of companies that are large companies like those that are in the NASDAQ 100. Now, does it have value issues? Yes, it does. You have to be able to tolerate the valuation changes and possibly the changes in the companies themselves. But if you're looking for dividends, this may be a way to do it without going and relying on one particular company. That would be diversifying in a portfolio that is made up of dividend paying stocks. Now, there's the risk. Of course, there's risk. I'll remind you to please read the disclosure that's at the very end of my presentation today, because it tells you all the things that you should know and look out for from the standpoint of investing. Okay, so let's get back into talking about these different stocks. All right, let's go to Ansys. One of the best things that you'll learn from my presentations is about the different stocks. If you're going to invest in stocks, don't just buy it because you heard that it's a hot stock and it's the best one to buy today. You might not even know what it does. Don't do that. If you're going to invest in stocks, understand what you're buying. This is a great example. You may not have heard of Ansys, but Ansys is a significant company in the engineering software industry. They build software that helps simulations. And you may not have heard of it, but they're in the news recently because of this. Okay. A lot of you have heard of the Indy 500 at the Indianapolis Speedway. Yeah, okay. Well, Ansys is supporting a very special race there that's called the Indy Autonomous Challenge. And this is a challenge of college students who are building autonomous cars that will race around the Indianapolis Motor Speedway. It happens in October. And actually, if you look it up, if you look up Indy Autonomous Challenge, you can get more information on their website and find out what it's all about. I think this is going to be such a cool race because it is all autonomous. The race is going to be of these autonomous cars. It's 20 laps around the Indianapolis Motor Speedway, and is to see which autonomous cars can make it around 20 times the fastest. Now, this is an interesting race, and the thing that Ansys is helping with is that Ansys is making available the simulation software to the college students so they can simulate going around the Indy Motor Speedway, so that they just don't have to put cars out there and test them without any type of understanding of how the physics of it works. That's the beauty of what Ansys does, is they build software that helps engineers simulate different types of operations without building it first. They can get a good idea of how it's going to work before they build it. So that's what Ansys does. You learned something today. There you go. Okay, let's look at the spaghetti graph of what's been going on with Ansys. Over the past 3 months, it's been doing really pretty well. If we look at it since the coronavirus market crash, again, if you follow the dancing cursor here, you'll see where it was down in between the months of February and March, but it's made a pretty good march back up to where it's actually higher than it was at the beginning of the year. When we look at the valuation of Ansys, Ansys does have competition. We covered another one of its competitors in a previous show called Autodesk, but Ansys does have its fans, and it has a very large base of engineering companies that utilize its software. And one of the benefits to using its software, and the reason why that it has a wide moat, here we are again with the beautiful castle with the big wide moat, meaning that Ansys has a good guard against its competitors. And what we mean by that is that they're going to probably be able to continue making pretty good profits because their competition is held at bay. Now, how do they do that? The primary way is the switching cost. People that start with Ansys, they become familiar with the software, they know how to use it, they stick with it, and Ansys does keep up with technology, with changes, and has a very big fan base when it comes to simulation. Okay. Let's look at who's buying and selling on the inside of the company. Amgen is an interesting company. They were up almost 2% for the day. And when we look at buyers and sellers that are working inside of the company, this might be the chief executive, it might be the finance officer. These are people, these are executives that are working inside of the company, and they have to report to the federal government. They have to report how many of them are buying and selling. And this is all public information that's available to you. And I'm bringing it to you so that you can see how it might impact your decisions on whether that you weed this out of your investing or you put it into your investing. Now, when we look at Amgen's pretty even over the past 3 months. In the past 3 months, they've been seeing 6 sellers and 6 buyers. About the same thing in the last 6 months, we've seen 36 buys and 39 sells. In the last 12 months, it's pretty even too. So there's not much been as a motivation to sell because executives are thinking that it's overvalued. Ansys, on the other hand, is a different story. If we look at the last 3 months, there have been 3 sales of executives from the inside. And when we look at executives over the past 6 months, wow, we've seen 60 sales compared to 16 buys at Ansys. And when we look at the last 12 months, there have been 70 buys over 36, excuse me, I said that wrong. There have been 36 buys and 75 sells. Now, when we look at the 2 companies and their valuation, Ansys is significantly different than Amgen. Morningstar is pegging the valuation on this company at $225 per share, and today it closed at $319. When we compare that to Amgen, Amgen's fair market value is pegged by Morningstar at $219, and the last close today was $243.01. So that makes a big difference in the valuation. The projected valuation. Of course, there's no guarantee on that. A lot of you out there, if you are buying an index fund, let's go back and talk about this just for a moment. A lot of you that might be buying an index fund, you might be thinking, well, this doesn't make any difference. I'm going to hold this stock for however long it's going to be, and it doesn't make a difference. Well, I think that that's a good idea. Depends upon your time frame. If you can last through the market cycle, index funds actually have done very well. Also, ETFs are exchange traded funds, and also the strategy that I mentioned a few moments ago, which is direct indexing, where we actually go in and buy just the stocks of that index without any other outside intervention from the mutual fund company or from the ETF management in itself. Now, there's some definite benefits to direct indexing. I'd suggest that you go back to my YouTube channel and watch the YouTube video on direct indexing if you want to learn how to the benefits of investing directly in an index in itself. But now let's get on and talk about just a little bit of the ESG of these different companies. Okay, ESG stands for environmental, social, and governance. Environmental, social, and governance. Now, I've used this chart every day to begin this part because I want you to see the companies that I'm talking about. This is the NASDAQ 100. This is the 100 largest companies that are in the NASDAQ. Now, the idea is, and I'm going to show you here, if you'll follow my dancing cursor again, around the top, there are 3 companies that are in nuclear power, 3 that make GMO products, 3 that make weapons, and 11 of them that are involved in animal testing. And we're going to talk about that just a little bit because Amgen, being a pharmaceutical company, does do animal testing. And that might be something that you want to be aware of, especially if you are sensitive to that issue, if you're vegan or if you're vegetarian and you don't want to buy a stock of a company that's involved in animal testing, then that might not be a stock for you. So let's take a look a little bit more at this. This is information that you can get from MSCI. I think, again, I tell you about this every day. MSCI does a great job of rating companies for ESG, and they rate Amgen very well as far as the way that the company is run in itself. The one deterrent, the one detractor that is with Amgen is that they do have animal testing for the company. Now, they're sensitive about it because it's a sensitive subject. If you are a strict vegan, you wouldn't want to have any type of investment probably that has any type of animal testing that's associated with it. So a company like Amgen may be not something that you want to get involved in. But if every person probably has a good sense of morality that they don't want animals to suffer. So Amgen's aware of this and they try to be sensitive to it, and they participate in the program that's called the Global 3 R's Award. And what that is, in their testing, they utilize the concept of reduction. That means they use the absolute minimum number of research animals that are necessary. The refinement, they're trying to minimize the impact on the animals. They want to make sure that they're being sensitive and not causing pain to the animals. And replacement, the third R is they're always looking for alternatives to testing on animals. Now, if you're vegan, I understand completely. You don't want anything to do with this stock. So there you have it. You have an understanding of what Amgen does and how they relate to the ESG attributes in their spectrum. Now, let's look at Ansys for just a moment. Ansys is a different company, and it's unique from the standpoint that MSCI rates it lower than Amgen, but if you are vegan and you don't want to have a company with animal testing, then you wouldn't want to have Amgen. But a company like Ansys may be okay to fit within your portfolio. Another attribute that I want to bring out about Ansys is this. We'll go past this one just for a moment since I just covered that. If you are Christian and you want to invest in companies that are biblically responsible, I use a service that's called Inspire, and Inspire does ratings and research on companies based on their biblical principles and making their company or their company functions on a biblical basis. And they give a very high rating to Ansys. So let's say, for example, that if you wanted to create a portfolio that was just of companies that were biblically responsible. That's easy to do when we do direct indexing, because we would look at an index like the NASDAQ 100 and we would eliminate those that are not biblically responsible and only put in companies that are biblically responsible. So that's just another way to use ESG. Biblical responsibility is one aspect of ESG, as is veganism another attribute of ESG. Now, that brings us really to the very end of today. I hope that you've gotten some information from everything. Remember, if you are listening to this on a replay and you have a question about ESG or biblical responsible investing or about direct indexing, go ahead and put it into the platform that you're on. And then I'll see it during the week and I'll answer back to you or bring it up in the next show for tomorrow. So with all of that, I'll also just mention to you too, if you have a question and you want to talk to me about that, you can set up a time to do that. I'm glad to talk to people about their retirement and investing accounts. And you can do that by going to my website at richardsfinancialplanning.com. And you just click on the schedule a call to learn more button, and it'll bring up a calendar that'll find a time that we can spend about 15 minutes over the telephone and talk about your particular questions. So thanks a lot for listening today. Make sure that you stand by for the closing disclosures, and I'll see you tomorrow.